Wow, we're going
And
into
there is no sound, so I will sing for a few minutes as we have gladiators entering the trading arena. Welcome to Trade Masters. Listen,
Whew.
no music. We'll
That's
start it
okay,
out.
man.
We'll
You
start
did
it
just
out.
fine.
Excited to have you with us tonight, Tackle Trading community. If you're finding us for the first time, Trade Masters is hosted by tackletrading.com. Sign up for a free 15-day free trial. Go to the store tab. Check out all of our pro features, our education, our community, our live show. We got a whole gazillion things. Plus, we have the Huddle, a new top 5 news story cast. If you want to know what the top 5 stories are, a little short podcast write up every day. Save you some time. Go to the Huddle. It is free for all individuals. Excited to be here with you tonight, and we're going to do something a little different on TradeMaster tonight. We are going to have a battle royale. You know, listen, I'm tired of 2 gladiators.
You guys are going down. I'm sorry.
Going into the arena. I want to see more blood. So we're going to have 3 traders, experienced, chartist, traders.
This would be a triple threat, Mark, not a battle royale. We're going to need more participants for the battle royale.
All I know is one of you will win, 2 of you will lose, but we will all benefit from your picks. We have fun with who wins, but what I love about Trade Masters is traders bring their picks each Wednesday night, and they can be anything. They can be long-term investment ideas, they can be cash flow ideas, they can be short-term swing trades, they can be anything, and they share them with us. And I love that midweek. All right, what you got?
Before we get into this, I think it's more like Thunderdome instead of Battle Royale. 3 men enter, 1 man leave.
Well, all I know is that I just want to make some money. And I've been very happy with the picks over the months on Trade Masters. Let's see what we got. Now, Frank, you are the defending champ here tonight.
Indeed.
You get to decide who goes first.
Ooh, well, I'm gonna throw the first timer. I think this is Dean's first time. I'm gonna throw it to Dean.
This is your first time on Trade Masters.
I'm gonna let Dean kick us off here this evening. See what kind of heat I got to bring.
That's a no mercy kind of open.
Fine, bring it. Whatever. Okay, right. So the hands. You want me to just pick my best one, or just?
Well, we're gonna have 4 picks from each of you tonight, so just start talking it through. Greg's running the screen; he'll run through the chart. So throw out the symbol and then just talk.
Okay, let's start with the top then. I found several trades. I was told 5, so I got 5 here, but I'll do the one that I like the best, and that is the AMC covered call is what I want to do. And we closed at, that's exactly what it's kind of amusing when the stock ticker pops up and it shows me exactly what I plotted the buy price for the 100 shares. The reason why I like the stock is because it's been seeing an awful lot of interest lately. As you can see that we kind of have some slowing momentum going on down there, and it looks like it's probably going to about ready to turn. I mean, considering we saw this really huge candle here 5 days ago. Why I picked a bull put was why I picked a covered call was because I was looking for some short-term gain on the call side in case it doesn't get called away. But if it does get called away, no big whoop, whatever. My plan here is we're going to make a lot of money. So I've selected the 5-7, 37 days to expiration. Yep, there you go, 5-7, and the since it says 1021, I love that it says 1021, the closing price, because that's what I have written down on my piece of paper. 1021, and then selling the 13 strike for about $1.10. I mean, I figure we could easily scotch another penny out of that. That's exactly the trade that I plotted out earlier on today when I was actually doing this before market close. And I show that if this goes to the strike before expiration, we have a potential profit of, well, of course, we have the $1.10 plus $3 above or almost $3 above the 1021 purchase price for a potential ROI of 31% and a probability of profit being almost 60% at 59%. And our total debit on that will be $9.10. That's really, I actually have a trade on this that is pretty much almost exactly that trade.
Now I've been doing stuff. I've been playing in the high volatility stock area a little bit. I got two questions for you. One, is there a trigger that would get you into the trade, or are you just happy with the volatility, or is there a level that, are you waiting for some upward movement before you get in, or are you happy?
Well, to be honest, like I said, this trade is one that I'm already in, and you see this big confluence of candles where it says the high of 2036. So I actually sold put against it like on looks like 127, 128, and I got $4 for the $10.
The volatility,
so I'm like,
those days
I'll
was
take the
insane.
$4 on that. So my actual cost basis in the actual trade that I am in is less than $5 in this trade.
No, and that's one of the reasons I've loved, and I've been doing this, is where I've been living the last 4 months, is high volatility, smash those covered calls. Now, my second question is, do you have a cost average down plan? Let's say AMC tanks by 50%. Are you willing
to, by 50%?
You know,
as in from here it goes to $5.10.
Would you cost average down? How would you play that? Would you just continue to sell calls against?
I would just continue to sell calls because, like I said, on my trade, which I got for like almost, even if it went 50% from where it was at, I'm still above my break-even point. Biatches.
Okay, no, I mean, I love the high. I have a feeling Greg does not have AMC, Old Money Homes, on his potential trade list.
You know, this is one of those trades that when I put it on the first time, the second batch of puts was the puts that I actually got put. So if you really want to technically call that all of those trades are all just like one progression, then my basis is probably like $4.50 to $5.
I love the constant high volatility, cost average down.
Yeah.
You know, I love that and that thing.
I'm not worried at all.
So, all right. Thank you, Dean. Listen, I appreciate the pick on the initial inception because I've been doing stuff like this on AMC and other stuff for months now. Frank, you're up next, defending champ. What do you got for us?
All right. Well, that was, now I'm regretting letting Dean go first. Now I got to bring it. So I am going to start off a little bit more directional than Dean with CYH, Community Health Systems.
That's good, man.
So this is going to be a good old-fashioned directional stock play, fairly inexpensive stock, although I guess that's in the eye of the beholder here. First things first, as you can see here, Greg, lots of momentum been picking up as of late, trying to spring off of that 9 here these last couple of days. This would be an entry above that resistance level for me. Pretty straightforward on the entry side of things. Whatever your rule is plus resistance, right? Or resistance plus your rule, probably a better way to put that. With a target in mind at about $17.50, we do have to go back into, say, a weekly time frame, Greg, to kind of find some overhead that maybe can push us back down. One thing that I like, of course, everybody who knows me knows this, I'm always looking for space, right? I want as few things in the way as possible. And with these guys in particular, I don't see anything that concerns me until we get into a pivot that was put on the weekly chart going way back into 16. So a little bit of clear air for me. Yeah, I'll look back, Dean. I'm a wimp on that on that side of things. So target in the 1750. Now I like to target 1-to-1 and scale out, as many folks know. So that would be kind of my trading plan, is to close half the trade at 1-to-1 and try to let the rest run. On the stop loss side, going to have a few options. Personally, as of today, I like getting the stop loss below that doji from yesterday. That kind of gives me the bottom of this recent swing right on the intraday. It gives me the 9 EMA. Another option if I wanted to cheapen my risk a little bit. And I'm always, I'm a big fan and I'm a directional trader, primarily. I always will identify 3 locations. Right now, location number 3 is way down at like 11.25 below that base that got put in back, earlier in the month. That's going to be really tough to sell on the risk to reward side of things. I'll identify it. I'd love to use it, but I can't afford to use it from a risk to reward perspective. I can also use today's low as an intraday support level. That's going to lower that risk a little bit. I think because it's not that much higher than yesterday's low, I think I'm getting a lot more value going down just a little bit. Get me the Doge bottom, get me the 9, get me where the buyers truly stepped in. Now, if we put in another inside candle tomorrow, that could become another option. If we don't break out, but we don't do anything, crazy one way or the other, but put in a higher low, that could also potentially be a stop loss place. But as of today, that's complete speculation, right? So for me, today's stop loss would either be below today's low, or I would probably lean towards below the low of the doji. Either way, we're getting over a 2-to-1 risk to reward ratio on that break if we can carry through on this momentum. So there's kind of my pitch for CYH.
Yeah. Go ahead, Greg.
Yeah, if I could jump in on this one, I love this trade, Frank. But the reason I love it is something that you didn't mention. Look at the last breakout there. So the last breakout went from 11 to, say 12.5. And then we got exactly the same, almost exactly the same amount of space from here. So going from 12.5 to over 14. So if you get that same move again, that's a perfect way to target it. And you actually went back and looked in time to find that target. And I think what happens is you end up in that exact same spot. Yep. I really like the fact this personality kind of has these little blocks that are pushing it up like that. So that's what I like most about this trade. Nice job.
I also, just a side note for naked put sellers that maybe don't like the directional, but those naked puts on the May monthly options are very, very attractive. They're very, very attractive. So targeting somewhere on rules, there's some nice premiums at the 12, at the 11, even down to the 10 on a risk reward. Little bit of a wide bid-ask spread, but the premiums are really, really nice.
Yeah.
Especially for a nice, boring hospital health provider here. All right, Frank, expecting nothing else less from the champ. Greg, now you've won this show a few times before. Pulling up round 3. What you got for us?
All right. Well, these 2 guys are whipping out with these $20 stocks and whatnot. So I'm gonna buck the trend here. We're gonna go with Boeing. We're gonna go right to the big boy trades here. All right. So I was looking at Boeing today. I know in our scouting report meetings, we have a few people that absolutely despise this stock, and fair enough for that. I'm okay with that. This is just a technical play for me. We've had this pretty deep pullback. It's rallied. It's gotten back over the 2. I got a 10 and a 20 MA here. We're right now at a double top with a doji today. What I'm looking for here is a breakout above this. If we get a breakout above this, you're in around 258, 259, depending on what kind of entry type you use. And then you're pushing to 280 pretty easily as far as I'm concerned. I don't see a slowdown here at 264. It's possible, but I think just the way this fell, it's unlikely. So my target would be out here about 280. Like I said, big dollar stock, so you're probably not buying shares in this thing. What I like is looking at the May monthlies here for just a nice bull call spread. What I was looking at here was the 260. Now, I will preface this. A lot of times we like to go kind of in the money when it goes for the first leg of a bull call. I'm actually, because we've got so much room here, between the 258 and the 280, because we've got such a nice little room there, I'm actually going to give this a little leeway, because as you'll see, the the premium, or sorry, the risk reward of this actually works out a little better if you go out. So what I was looking at was the 260, buying the 260 and selling the 280. I want to go out to where I think it can go, selling the 280. You're about $600 into this trade. And if you look at the Analyze tab here, just make sure I got the right one in there. Get rid of that bad boy right there. So you're in this for about $600. You got a potential of 1357. So you've got your 2-to-1 risk reward here. Like I said, if we break out above this current double top here, I think there's some smooth sailing. You got 51 days to get there, which I think is more than plenty. It only took about 7 or 8 days to get down from 280 to 230. So yeah, just a simple, directional play here. The reason I'm looking at this stuff is if you've been watching the indexes recently, we're pushing back up towards those highs. If you look at the SPY, that was a green candle today. We're at a double top there. The NASDAQ's actually improved a little bit. The Russell's improved a little bit. Now they haven't broken out yet, but we've got that little push back up. So that's why I'm looking at these trades and thinking that there might be an opportunity here.
All right, trigger above today's high.
Yeah. Breakout level. So like I said, you got a double top here with this red candle and the doji. So I do maybe 10% of an ATR above the high of this candle there. And you could look at this and build yourself out a stop. Obviously, if it breaks support, you could look at the first support being 245. You could even look down to say 234 here, go to the Analyze tab, 234. You're risking about $300 if that happened tomorrow, to make a potential 1300. So there's lots of places to put stops, and if you're happy with just the overall risk, you can let it work.
All right. Well, what I loved about round one was 3 different types of trades. I understand all of them, like them all different, but completely different trades for different personalities and different looks. I liked it a lot. Now, Greg, you are our official joke bringer at the end of every round. What do you got for us?
All right. I found this one funny. Maybe you guys will, maybe you won't. But women only call me ugly until they find out how much money I make. Then they call me ugly and poor.
Ouch.
I appreciate that.
I like that one.
I like that one a lot. All right, round 2, Dean, start us off.
All right, so I'm gonna delve into probably it's all 3 of those trades. Well, I liked them all, but I'm going to now throw out the home run trade because I feel like I should. So we need a CRON, please.
CRON.
Kronos Group, I think.
Hey, I think Dean's knows my trading style lately. He's throwing out AMC and a marijuana stock,
Right. Okay, so this one's going to be a risk reversal. I have chosen this particular trade for this particular stock for the reason of, there's been an awful lot of movement, an awful lot of big candles in this stock. And not only that, I just like where it's positioned for one thing. And as we see here, we've got, looks like a little bit of support, I should say, really slender support right at 9. And what I've chosen is to go with the $9 put sell to open from the 5-7 for 37 days to expiration there. And yeah, I like to go quicker on them because of the fact that it could change, and I just don't want my money stuck there waiting,
Dean,
selling that put buy the $10 call, and I figured it up for a 0. Read that 0 net credit, but for the infinite ROI because there's none of our money in this trade.
All right, so we're dealing with May 7th options on both of these.
May 7th options. Yes,
So
exactly.
you're selling the 9 put and you're buying the 10 call. Is that
Yes.
correct? Okay.
Yeah, and with the spread earlier on, I was able to figure out how to put zero of my money in this trade. Excuse me. And I figured out that we have a 73% chance of it being in the money on the call side. And the reason why I said that was because the put delta is only, what is it on this one? I think I figured out is like 35. And since I'm selling the put, it's 36, right? Since I'm selling the put, that's a positive number. So that adds to the $10, which is 45. So that becomes 71, 72, somewhere in there. And I just juiced it just because 1% is 1%, whatever. But anyway, like I said, there's no money of mine in this trade.
Now, the May 7th, the bid-ask spreads on the weeklies there are really, really wide on some of them.
They were really wide. Yeah, they were both tracking. When I set this trade up earlier on at around 11:30, both the $9 put and the $10 call were both the same bid ask. And so I'm like, all right, if you're the same bid ask, then whatever, I'm comfortable with that.
Okay. Will you go out to the May 21, Greg's, real quick?
Yeah, I also looked at the May 21 and it wasn't that much different.
Just to give you a sense more of like the tighter bid ask spreads on that.
It's definitely tighter on the bid ask on that.
Here's the only issue that I see. So we got a few hundred contracts on the May options, the monthly options. But when you go back to those weeklies, there's nobody on the put side to take your trade.
There's nobody on the put side, right? Yeah. I think that what I was looking at earlier on, I don't know why that it appealed to me. It just did. Like I said, if I had the same bid ask on both of those, I wasn't really terribly concerned. And my feeling is that if I had no money in the trade and I make $10, whatever. But if I have no money in the trade and I make $300, fine.
No, I understand. And I do go back to the chart for a second. I do like a playoff support. There's a lot of ways you can play support a bounce, right? You can go directional with shares. You can do a bull call spread. There's a lot of ways. I do like that support level that's formed there on Cron. All right. Thank you very much, Dean. Frank, you're up next.
Hey, before we go on there, Mark, I do want to mention something just on this one. If you guys looked at this risk graph that you have, there's upside potential and there's downside risk as well. So even though you may not have money in the trade, as Dean may have set it up, you do have to understand with the risk reversal, this is an open-ended risk.
It's an open-ended graph.
So
you can
run into some trouble. So if you're looking at these kinds of trades, and this is just to save yourself some pain, is you need to have a tap out point where you get out of this trade if it goes against you. So just a public service announcement there for you. So, all right, sorry, carry on, Mark.
All right, Frankie, you're up next, round 2.
All right, I am going with a bit of a reversal on Ballcorp, BLL. So first off, if you don't mind, Greg, we go to the weekly just really quick.
100%.
I have one thing that I got to check. I'll be right back.
You betcha. What you're seeing here is a little bit of a weekly pinch, right, Mark? Where we've got those, in this case, the shorter term weekly moving averages pushing right along with that 50 weekly. So this is a little bit of what at least Coach Mark and I like to call a pinch. Sooner or later, we're going to come out one way or the other, right? So now we can go ahead and head back, but you can kind of see that trend line that Greg's drawn there. If we can push through that, that's kind of our signal here as we kind of come into the daily to try to think this one through a little bit. And there's one added bonus of this we'll talk about here in just a minute. For me, I love the fact that this week we've put in a higher low. You can clearly see that we've double bottoms, right? Early March, mid-March, and then this little pullback off of resistance this past week or so, we've created a higher low. So we're starting to show some positive characteristics. However, we've not broken any resistance, right? And that is important. What I love about the resistance is, I'm going to have that, Greg, where I'm sure you have it there. I'm looking at my own chart here. How about just those recent highs, right? Those highs up in there in that 86.50 range. If we can break through that, let's think about what we get. We're breaking resistance, right? So we're kind of Wing in that scenario. We're taking out the descending trend line wherever you might have it drawn, right? We might not have the exact spot, but in my opinion, at least, we'd clearly have taken that out if we break resistance. That will also put us at that 9 on the weekly chart. So if we can push through that resistance, we've seen a double bottom turn into a W type of a pattern, pushing through an awful lot of resistance after really consolidating in that monthly pinch these last several weeks. So on the entry side, that's kind of what I'm looking for. I would like to see this low that we put in this week hold before we broke resistance. I think that would be better than if we came back to support and then broke out 2 weeks from now, but I would still be interested in that scenario. On the targeting side of things, just going to depend on how long you like to be in a trade, right? You know, this is going to look an awful lot like a retracement type of a thing on that weekly chart. I know Coach Mark would probably say the weekly 20 would be a sensible place for a target, or at least a first target or some profit taking. I think that could make some sense. But really, I mean, it was just a couple months ago that we were knocking on the door at $100. Now, when you're talking about these deeper retracements, these reversal type of things, I mean, there's a lot of layers on the way up, right? So 92, we're going to have a little bit of a fight. I would argue probably around 94, we'll have a little bit of fight. So there's going to be, I mean, hopefully just a straight shot, right? But realistically, more likely it's going to chop, pull back, you know, run up, pull back, run up, pull back, that type of thing as we're working the trade to the upside. So, but I wouldn't fault anyone. It would be a little bit more of maybe a marriage between a swing and position trade if we tried to get back to resistance. But honestly, none of the resistance overly concerns me. I wouldn't fault anybody if they were trying to target back up to the top. I think we could go a little shallower than that and be fine as well. On the stop side of things, a couple of options. Again, I always like to give myself a few options. Right now, I think the choice for me is this low from this week that we put in on the 20th or on the 29th, or maybe it was Friday that we hit the actual low point at 26. That's probably my choice. The actual bottom, a great choice, but are you comfortable with the risk to reward there? That's probably not, in my opinion. I don't think that's going to let the risk to reward work. And right now, we can actually just draw a trend line, Greg, just kind of connecting that bottom from the 19th into that bottom from the 26th. And let's see if we actually break from here, that trend line becomes an option if we want to be a little bit tighter for our stop loss. That should line up fairly close to the 90 MA, although I am guesstimating. And it would depend on when that happened. If it happened tomorrow, it probably would not be that lined up. But if we take a little time, it probably should be fairly close. So going to give myself kind of the big option would be the bottom for the stop. I love it. That's a great spot for a stop loss, but risk to reward is probably difficult. If I wanted to do that, I probably needed to be in already. I would imagine the trend line is going to be kind of that real tight stop, right? And the low from this week or Friday would be kind of that middle ground, at least as of right now. And depending on how long it takes to break out, we could have new options develop, right? But that's kind of where I am on these guys as an added bonus. And then I'll shut up. These guys are kind of their own, funky little K trade, because if that bottom gives out, and that's, potentially a ways away, that's if we don't break resistance, if resistance holds and we kind of fail and work back to support and break below that, definitely a pretty bearish signal in my opinion. So potentially, while it's a little ways away, could have a sell signal if we don't break out and have this actually be a bearish breakdown trade from a price action point of view.
So entry above, this smells like a reversal, right? It just smells like it. I like how it's been holding the 50 weekly, sticking it with very little volatility. So get in above that. You got to break resistance first, right? Just to clarify that to them. Yeah, I like that for a reversal quite a bit. All right, Greg, you're up.
All right, I'm going to go with another big one here. These big ones are just making me salivate a little bit. Caterpillar. We all know industrials has been doing pretty well lately. XLI, breaking out to new highs again. doing pretty well. These industrials just seem to be very, very strong. We had a pullback, found some support, ran back up right to that same spot again, little, double top here today. This could go either way. So the way we got to play this is we only get in above this high, which I think I looked at this earlier. This is a very long time high. It might be an all-time high for all I know. So what I like about here, like I said, this is another play that's very simply directional. I want to make some money. I want to make some money on stuff that's moving. Industrials has been moving. It sets up for a good risk reward. Again, this is very similar to the Boeing trade. I need to go out, give myself some time. I like the May options. 51 days is plenty because I expect that with the ATR that we have here, which is about $6, I expect that we could reach our target, which our target was around the 260 mark for me. I expect we can get there very quickly. So another simple little bull call here. We're using monthly options with lots of, you can see there's tons of volume and open interest here. So buy the 240, sell where we expect it to go, the 260 there. You're doing this trade for $400. You got a $20 wide spread. Make sure I got this right. And so you're looking at $484, profit potential 1,500. You got yourself a little 3-to-1 action here, and you got it on a stock that's been showing massive strength recently. Just kind of stepping higher, takes these little dips and then takes off again. So again, another directional play. And again, the only reason I'm looking at all these directional plays is because what I'm starting to see, we're still in neutrality across a lot of the indexes, but we're starting to see them push a little bit harder up to that resistance. So if we get those breakouts, then we can get this, all kind of swept up in the move.
Yeah, so my big question, because very straightforward on the analysis, hot area of the market, breakout level, very clear. You've mentioned on both of your trades, because both your trades are in the industrial area, and you've mentioned that the broad market is right there on the cusp. Would you wait for the SPY to break out itself before taking either of these trades?
No. So CAT is actually going to be represented more by the Dow. You could wait for the breakout of the Dow, okay, as opposed to the SPY. You could wait for the breakout there. What I'm seeing here, sorry, back to the CAT here. CAT is a portion of the Dow, as far as I believe anyway, unless I'm mistaken. Yeah. If this thing breaks out, it's going to take the Dow with it, and vice versa. So what I'd be doing is I'd just be looking for a level above here. So for me, like I said, portion of the ATR above this high. If it breaks out, I'm not too worried about the index pulling back, because again, this being a part of that index, I think you're going to see them both go in unison anyway.
All right.
So I'd just be looking above here. If Caterpillar decides to break out, you can check the Dow and the ETF for confirmation, if you will. But my expectation is they both go at the same time.
All right, jokey joke time.
Oh, I have a quick question for Greg, if you don't mind, Mark.
Yeah, sure.
On this, because it's a debit spread, do you kind of plan on using the spread itself as the stop loss?
Yeah. So I should have prefaced that. Thanks for asking that. No, I always model these, right? So I believe that the market has a really good way of telling me I'm wrong. It does it quite often, actually. So what I do is I pick spots, right? I'm a big levels guy, anybody who knows me. So I'd be looking for levels of support. So the first one I would see is around the 225. That would be somewhat of a tighter stop. You could probably look at the next level here around the 220. That one there is probably one that I would look closer at. I don't want to choke this off. I want to give it enough, but yeah, at 220, your risk is only a couple $100, right? Whereas again, you still have that potential. Now, one thing I will say about bull calls, just in case you're not super familiar with them, is even if it hits our target price of 260, we still need time to get there. So our overall return might not be the 1,500 that we're expecting, but if it gets there soon, right? If it got there tomorrow, it's $700 versus risking 200. So you're still that 3-to-1, right? No matter how it all plays out. So stop loss wise, yeah, I'd be looking for a level here. I really like the 220. That 220 level there has been some recent support. If it broke that, then I'd probably tap out at that point.
Yeah, makes sense. Makes sense. I could see why you'd go that route.
All right, jokey joke time.
All right, jokey joke time. All right, my wife left me because I'm insecure. No, wait, she's back. She just went to get coffee.
You're bringing them tonight.
Oh,
I see why
wow,
Mark made
Greg,
you the joke
bring
guy.
in with the jokes. Holy cow, those are two good jokes.
I told you my jokes were better than the picks. I told you.
The picks not too bad. Listen, I like picks in hot area of the markets. All right, round 3, Dean, you're up.
All right. Let's see. So, let's see. Let me make a note here. I already did that one. Okay, so I'm going to go back to my first one that I looked at that I really liked. It's bull put spread on AG. And this one I went very short comparatively expiration, the end of the month, 4:30. And there you go, 4:30. And my spread was buying to open the 14 and selling to open the 14.50. Now that gives you, just based on just looking at the bid ask, that's 10 cents right there. You might even be able to shave 11 cents out of that. Sure, 11. That's what I figured it out for earlier on, because it was
14.50, 14 is the spread.
Yeah, there you go.
Okay.
14 and 14.50. Yeah, there you go.
All
You
right,
got
I
it.
apologize. I didn't hear what you said there. So, okay, we're good.
They even say 18-cent credit. I figured it out for 11. So they even gave better than I was expecting. But for my numbers, that's a 22% ROI with the net delta being only 7. So a 93% chance of profit there. And like I said, I had this figured out for the 23, but I changed it to the 30 because the numbers didn't work out as well on the 23-day option, which is 423. And the reason why I like this trade is because silver and gold have been kind of tracking each other recently. And AG is a silver miner, First Majestic, that's it. And well, considering the strength of silver and gold right about now, I don't, even if I was in this trade and it went against me a little bit, I wouldn't be at all concerned because of the fact that I just like silver and gold, what can I say? But the good chance, there's a good chance. Okay, sorry, I was distracted by something. There's a good chance that it will continue to go up. And if you go to the chart for a second, then there you go. I liked it mostly because of the fact that we had a nice big candle today. And we've been tracking on all this really slow. Just if you put in a line there, you got a pretty good wedge that looks like, yeah, from the low, this localized low over here on 118 to now. And then if you ignore this huge candle of 2401, it's a really nice looking wedge. And the compression there is going to probably make it a break out to the upside. And really, it's not going to look back because we have nothing really to tell us that, hey, there's not really any good resistance in here, because it's just up, it's down, it's up, it's down. It's not hanging out anywhere really.
No, and if you can get, we pull up the weekly chart real quick. Another thing I like about this trade, I'm going to do this trade tomorrow, is that I'm sitting on the 20 weekly. I love doing bull put spreads under the 20 weekly. I've had a lot of success over the years. I love it. I also have the old resistance acting as new support. I got a couple things working for my favor here potentially. The wedge, if you get a breakout, is it. I love the credit. If you can get anything close to 18 cents, you liked it at 10. If you can get 14, 15, 16 cents, that's an attractive return
that's what I thought.
on time. And I like the technicals. I like them, how they've lined out. I like that trade, Dean. I like that trade. All right, Frankie, you're up. Round
Yeah.
3.
I do. I agree with you, Mark. I do like that one a lot. All
That's
right.
the first one I looked at today.
So,
Like that.
there you go. I'm glad. See, you should have started with that one. Right?
I know, but I don't want to pull out my best stuff. Then if it just goes downhill from there.
I know you're kind of sitting on. If I want to bring out the best one, right? So
I really wanted to, but I didn't.
So that was. I do like that one a lot as well.
Thank you, Frank.
Let's see. I'm going to steal my Canadian brother's thunder and go with EWC here, Mark, before Greg can do it. You never know when my Canadian brother is going to
blame
bring
it on
out
Canada.
Exactly. So this is the MCI Canada ETF. These are the large and the mid cap companies that are built up in this ETF, right, Greg?
Mm-hmm.
So what I like about here is we've had the pullback. A little deeper pullback than I usually like. I'm a wimp, right? I kind of like shallow pullbacks. But when we get a deeper pullback after hitting that low on the 25th, and we see people braver than me start to move us back in, then I can kind of start thinking a little bit, right? And what I love about the way we have developed on the price action in the last couple of days is we've created, I call this the pullback on the pullback, all right? We kind of, after hitting the high on the 26th, just very slight pullback, very important to me that we put in a higher low. And at least as of right now, we have done that here yesterday, pushing back into resistance here today, taking out this basically the 4 bars, right? The last, today and Friday and Monday's resistance level would be my entry point. Nothing crazy here, just looking to trade the trend, probably a secondary target in the, approaching the 36 ballpark would kind of be my secondary target. I always prefer to target the swing high as my first target, if at all possible, at 1-to-1. So that would probably be kind of where my targeting head was. On the stop, again, got some options here. Option A, the actual low. That can work risk to reward. So the low from the 25th, that would probably be my choice because it will give me a risk to reward, about 2.35 to 1. And I would probably choose the low of the 25th. Option 2 would be the low from yesterday, because that's where, at least as of right now, the pullback of the pullback stopped, right? So we pulled back, we hit that low, we've seen some upward movement here. That would be my second option. My aggressive option could either be below today's low. So if I were building this trade, I could just put my entry a little bit above today's high, a little bit below today's low. That would be pretty tight. If that's the stop route I wanted to go, that would also kind of line up with potentially the developing intraday trend line by connecting those two other option lows. So have a few options on the stop side of things, depending on how tight or loose I would be wanting to play the broad market. With it being a broad market ETF, I would prefer to give it a little bit of wiggle room personally, but I could understand the argument for tightening up a little bit as well.
All right, this is an excellent trade, straightforward. There's 2 things I like about EWC. One, and I've traded this a few times, it's a worm burner, right? Like, I got so many high volatility plays. I got so much action. This thing is like watching molasses, which isn't necessarily a bad thing. It's nice having a couple boring plays that are easy to manage in the midst of everything else is crazy. Second thing I really like about this, it's been a long time since I sung Blame Canada from South Park. So if this trade goes against me, I can break that out.
You still win because you get to sing.
I still win.
It's the rest of us who lose.
With true passion. So, all right.
It'll cost Mark a pile of money, but it's Canadian dollars, so really it's nothing anyway, right?
Oh, if I got to do this in Canadian dollars. But listen, our Canadian friend Greg, round 3.
All right. Well, since my buddy Frank there broke the cherry on the ETFs there, I'm going to go for one myself. Mine's going to be a little bit different though. I'm not going with the Canadian one. I'm going with the retracement here in the Russell 2000. A couple of options here. First of all, we'll talk about why I like it. Little known thing here, and maybe not little known. So it used to be little known to me, but I love how all of these moving averages have coiled together. Okay. What this typically means and again, nothing's 100%, but I've seen this movie before. When you get these moving averages coiling together, what happens is energy is being built up. Okay. Now the energy's got to go somewhere. It can only be transferred. It can't be created or destroyed. Little physics lesson for you there. My expectation, because we've just put in this little pivot here, right? A little higher pivot than the one we had here. We're getting these higher lows. We're at a precipice right now of where if it gets above where it is today, it kind of popped up, made a double top today. I really like the fact that you can get in around the 222 mark, and you may run into some issue at 230. I personally think, just the way this came down, that you could get to 235 pretty easily as well. I like this. The Russell was showing a bit of weakness. Kind of got rid of that. Got a big old candle here. You look at this here, and the volume on this candle, that was very strong, and it's kind of kept that going for the last few sessions here. So like the coiling, want to see this breakout above. Few ways to play this. I actually, again, bull calls are fine. You can hop in a bull call, but actually the way I like to play this one here is a bull put spread, actually. So if you want a little cash flow trade here, I want to go out 30 days. I typically go as close to 30 days as I can get it. Now, what I want to do is I want to find a level where I've got some protection on the downside. So, first level of support is probably the 212, got another one around the 27. So what I'm looking at is around the 205 here. You've got lots of old resistance and old support here, right around the 205. So if we make a trade going 30 days out, and we go the 205, I'm going to go a $3 wide spread here, 202 there. You're getting a 50-cent credit for a $3 wide put spread there, bull put. And your short strike is a 21 delta. So you've got a really solid probability there. Plus you're getting a massive credit for a $3 wide strike. So just a very simple bull put spread here on an ETF. We're coming into earnings season, so we don't have to worry about that with these ETFs. This is something you can run through to that 30 days without having to worry about any of that kind of stuff going on. I just love the trade. I think it's starting to show some signs of life here. And entry above that 222, and Bob's your uncle.
No, I mean, I like that. You could go a little quick directional play to the upside. I also like that bull put spreads under the 20 weekly. And I like, and once again, I like the cyclical reopening, economy getting hot themes. You've had 3 of them tonight. You joked, you said all of my trades are the same. They kind of are, but they're different ways to play it. So
I wasn't joking. I told you they.
All right, now you have a lot of build up from your first 2 jokes. They were home runs.
All right, this one's one of my faves, actually. I like this one. My Tinder bio says that I have a corner office with views of the entire city. I drive a $500,000 vehicle, and that I'm paid to travel. My dates never seem too happy when I tell them that I'm a bus driver.
Nice.
Listen,
3 for 3 on the date jokes, eh?
You definitely listen. I'm I pull up the only bus company I know is Bluebird BLUE. Potential breakdown on BLUE. Little bonus bus joke.
There you go.
Like there's some support there that I guess it's buses aren't enjoying the.
They're not doing too well because kids ain't going to school. Yeah.
So I'm gonna think about this company a little bit. I like. Okay, anyways, that's another. Listen, final round, last pick. Whatever your best remaining pick is, bring them our way.
Okay, this is what I got for you.
Where's that music coming from?
It's coming from me. Do you want me to turn it down?
Yes, if you would.
All right, no problem.
Little moon music for the final.
I thought maybe it was
it's just my ambient channel is what it is all. Okay, so last trade that I'm going to do. We're going. This is my big boy. I'm going to go straight out there with GameStop. Give me some GME on that ticker. And I like my favorite trade, and Mark, I think you could probably attest to this, is the cash covered put. And here is one of the things on my cash covered puts. When I do them, I put them on. And if it goes against me, I don't care. Give me the stock. Give it to me. I don't care. So this is what I've decided to sell.
You see, I'm curious about this because I've been selling puts on GameStop for months.
Yeah, me too.
No, I'm just curious what strike price in which month you are doing.
This one I settled out for the 5/7 expiration.
You just love that 35 days till
I
expiration.
like anywhere between 30 and 40 days is my sweet spot. And if I can get less than 30 days, I'll go for it. If the credit's good enough, whatever. So this is what I figured out. 5/7, I want the 150 strike.
Oh, you're not messing around.
I'm not messing around, dude. Give me that 28.50. I mean, you could probably even shave that to 29 almost. Pretty close. I figured it out for a 17% ROI, or that was on the numbers for early on in the day. It was only 25.50. So I'm like, I got an extra $3 out of that, and all I had to do was wait for the close. Whatever.
All right. So obviously now I'm going to push back on this one a little bit.
Push back.
Okay, because now obviously we've entered into pure gambling territory. Now,
pure gambling right now. Yeah.
I don't have a problem with that personally. I have a real problem with it, like teaching it in a sense.
Oh, of course.
Because I don't think any of us would agree that GameStop, if we're put it at 150, nobody's like, that's a great deal.
No, dude.
Like, I'm just getting the value of a century at 150, even with the big credit.
Right. Yeah.
Like
that was what I was really going for, was the credit. And considering that we're just right at 1 ATR from closing, the closing price is like, I think ATR is $41 or $39 on it right now. If you look at that indicator,
41.
But I'm comfortable with being 1 ATR above where my trade is. I'm fine with that.
All right, now because like I've been selling naked puts on GameStop, but they've been at like 15 and $20. A price that I'm willing to take ownership of. Obviously, the risk here, especially on a high volatile stock. I mean, GameStop could go down to $40 in 5 sessions.
It has.
Wouldn't shock anyone.
It wouldn't shock anyone, but then also the next day it's up another $50, and that's the reason why that I'm not even if I were in this trade. By the way, I was in a trade where the strike price was $20, and I got like $1.50 credit for it or something like that. And when it went to 483, which is what's right there, I could not get out of my trade at a profit. The $20 strike. It was trading at over $400. I couldn't get out of my trade at the 20 strike. That's the thing that makes me think, okay, I can wait for some time decay because this thing is all over the place. That was the only reason why I thought that this would be a good trade, is because it's up, it's down, it doesn't matter. You're pretty much waiting for at least the midway point before you're going to manage this trade anyway.
Well, I will be doing the AG trade. I don't think I'll be tagging along with you on this one.
Yeah, no, don't do this one. Yeah, totally. The only reason why
Old Money Holmes is shivering right now.
I know. I mean, Greg and I are cowering in the corner.
I wouldn't touch this with a 10-foot pole because it went from like $15 to 483. It can go from 150 to 0 in a day.
I know, exactly.
I'm not even joking yet.
Pure gambling, I know, dude.
And fundamentally speaking, this thing is a nightmare.
Mm-hmm,
it is an absolute nightmare. So anyway,
that's you got some gambling, yeah.
Old Money Home.
Yeah. So. Well, okay. I'm going to tell off on myself. The last year and a half, all I've really done is sell puts, cash covered puts. That's it.
I love cash covered.
100% of my strategy has been cash covered puts till I get the stock. And then I sell calls until it gets called away. And then I sell some more cash covered puts. Boom. And I'm not only have I made a decent amount of money doing it, it's been super easy to manage because of the fact that I'm not worried. This is not the one that I'm making the bulk of my money on. I'm making it on a lot of those other stocks that I was doing earlier on, like the AG. And I think that one of the stocks that I've made the most money on throughout this whole process of doing this has been Mankind. Because
a little biotech company,
yeah, biotech, yeah, the inhalable insulin, and that stock has been responsible for a third of my gains over the past 15 months.
Now, I have one last question for you, Dean. If
Yes,
you
sir.
put the shares, let me see
Yes.
your hands.
Yeah.
You got diamond hands?
Right now, no, I don't care. I just want to make money, and I'll just get. If I put the shares, I would sell calls, and that's all I would do. And that was the other part. Go back to the option chain. Go back to the same option chain. I don't care. So if you scroll down into I could sell well into the 300 range, even if this went down to $50. I could probably sell well into the 300 range and still make a decent amount of money on it.
Here's the issue with that. If this gets down to $50,
it ain't going to be that.
Those premiums ain't going to be there.
That premium ain't going to be there. But I could still probably sell the same premium as I got put and still make money.
Now, I will give you one thing. I like, for those individuals, because so many, now once again, I don't advocate for any of our community to do it, but for so many individuals in GameStop, that have been part of it, they just buy the shares and hope it goes up. At least you're attacking it from a premium standpoint.
That's the only way that I would play this stock.
So you're attacking it from a premium standpoint where you get massive premiums.
The 300. That sounds awesome. What a great deal.
For the last 5-6 weeks, that premium attack, has worked. I just like my entry point to be like in the 20s, but I'm a
sure.
Fair enough.
All right, Frankie, last pick. What you got?
I was also promised 5, and so I've been debating, because GameStop scares the heck out of me. So I've been debating so the chart I like the best is a utility stock, but it's a utility stock. I'm still going to go with them, and that is ETR.
That's why I love Trade Masters. GameStop, one, and then a utility stock.
Yeah, not the same exact cup of tea, right? So ETR, just a little utility play. If you would mind just going over to XLU very quickly, Greg, just to kind of see what the sector has been doing. It's been heating up a little bit right now. It is utilities, right? Anybody who's been around, they know utilities are utilities, right? They're not the most volatile. They're certainly not GameStop, but there's a couple things to really like, in my opinion, about the ETR chart. The first thing is, and this is a big one. This is one of my personal trade setups that I'm a big fan of. The second test of the 200-day moving average. So whenever a stock's below that 200-day moving average, I assume the first time it gets there, people are going to take profits. That is exactly what happened on these guys back in December, January. That's exactly what happened the middle of this month, right? We got into that 200, it pushed us down. We ended up seeing the buyers step back in, right? And I can only think about myself, but I'm thinking I would want to buy at the 200, and I'd definitely take profits at the 200 if I were amongst the crowd that bought it early in March. So when they're not selling it, or where they're accumulating more, and you can see we've been consolidating here, kind of riding above that 9 EMA, it shows me it wants to break that level of resistance. We actually, I believe, broke the 200-day moving average here today. I would call this a breakout. You could either look at the entry above today's high, or be a little bit more like being a wimp and go in on that doji on, what was it, the 17th, the high above that. I really like 200-day moving average breaks, and I liked that the space has been, kind of cooking. And like you said earlier, Mark, sometimes you need a little boring in your life. It's also maybe, a little bit of a, kind of might be stretching a little bit, but could be considered a reverse head and shoulders, right? If you stretched a little bit by taking out that pivot from back in December. Really not a lot of resistance until we get into that 106. Oh, it's also a 100 breakout. I know some folks really like those round numbers, right? I don't dislike them, but I don't think I like them as much as some other folks, but certainly I'll take it. don't really have a lot of resistance until we, because we're really sideways, right, as of late. So up into that 106 ballpark is kind of the first, what I would expect to be a bit of a challenge on these guys. And I would expect it's a legitimate challenge. The second target, hey, if we can break through that, we have more room into that 110 range. But I'd really be eyeballing from the, from the management point of view, what am I going to do as I approach that resistance level? I think these guys have about a 3.8% dividend yield.
It's about 4%, yeah.
So pushing into the four mark on the dividend yield. If we kind of end up holding, because it's utility, it's not going to probably be a 2 or 3 day trade, right? I mean, if it gets to 106 in 2 or 3 days, I'll take the deal. Don't get me wrong, but those are not my expectations. So if it turns into a bit more of a position, that would, certainly not be a bad thing to be able to maybe snag a dividend payment along the way. So certainly not GameStop, not particularly exciting, but very technically clean on the stop. I like going below the base if at all possible. That would be kind of my primary choice, right about $96, the low of this consolidation period. This will invalidate if we don't break out, if we close and break that 20. If we break the 9, I do expect that we'll come back to the 20. If we take another run from there, I would be okay. But if we push any further than that, that would invalidate the setup for me personally.
I love when you get this multiple band breakout. You got the 200-day moving average. You have a clear horizontal line of resistance. You have the $100 whole mark, and you're clearing all of the weekly moving averages to boot. I mean, you break above that, that's breaking through a lot of resistance, right? Mm-hmm. A lot of resistance, a clean chart. Extremely clean chart with upward mobility, nice boring dividend pair. Man, you could do a lot worse than this. That's a nice setup, Frank.
So yeah, if it was like an industrial play, I'd probably be like, wow.
Oh, if it was an industrial play, like if it was like, anything sexy, but listen, not everything has to be sexy, right?
Not everything has to be sexy.
I need to tell my own portfolio that. I need some boring in there right now. That's clean. All right, Greg, last pick, last round.
All right. We're going to this reopening theme for the last pick of the day here. Caesars Entertainment. Pullback, support at 80. This is going to be a very simple technical play. It's how you want to play it is really how it works for you. I like this pullback. Found some support here, which was old support, old resistance here. Found some support, put in a higher pivot low right here, running into this resistance right here. We want to break above this 89. That gets us against above our moving averages as well, the 10 and the 20 MA there. You'd probably get a crossover very quickly after that happened as well. You've got free air here between 89 and at least 105. So a couple of things you can do here. Simple stock play, depending on the size of your account. If you buy this stock, they're going to withhold 50% of it in margin. You could get a real nice run between 89 and 105 there, right? So this is about a $5 ATR. So I think you've got some decent movement there, and you've got nothing slowing you down. Like there's really nothing. I think you maybe run into it at 100, but just the way that fell with the momentum, I think you get up to that 105 as a target. The other way to play this, back to what I told you guys before, all of these are pretty much the same trade. I like the bull, the bull call spread here. Looking at the 90 and running her back up to the 105. You're into this thing for $400. Look at the analyze tab here. Pull this down, pull this back. So you've got a potential $1,000 on your pocket here. If you just let it ride at 412, you've got 2.12, 2.2 risk reward ratio there. Simple trade. We just, with the reopening theme, Vegas getting back to doing what they do best. I see it having an opportunity to push back up to these highs here. So.
No, I like the reopening play. I've been a big, huge reopening advocate for a long time. I like the entry point. Listen, we're going to have a wave, at least in my thesis, right? You never know. Maybe I'm wrong. But you're going to have a wave of vaccine, good distribution news. COVID, Europe opening up, and it could all line up. I just think there's a lot of legs in reopening this year because I think we're going to actually reopen. Life's going to get to normal, and I'm willing to bet a few bucks on it. I like the play. I think I like the stock play here a little better than the bull call, if you can afford it, right? Like,
it depends on your account size, right? But even if you got a smaller account, there's nothing wrong with that bull call. That's a 2-to-1 risk reward. You're getting essentially the same amount on the stock play, right? So you know what I mean. You can't ask for more than that.
And, and if this trade works out, because I'm going to look at how much reopening exposure I have tonight when I'm looking at the trade. I mean, nice thing I like about Caesar is nice volatility. So you get going on a longer term position trade here, you can pick up some big premium on covered calls on your way up. I mean, it was running in the 60s on volatility last time I checked. So
actually, one thing I did
head on 70 there somewhere.
One thing I didn't look at that's kind of could be attractive too is a little bull put action here.
I mean, there's a lot of ways to play reopening, right? But
yeah. So $5 wide spread gets 66 cents. So you probably won't get 66, but you could get 60 for it, and you're right at that 80, that solid support level there. So there's a ton of different ways to play it. I like this. The one other thing that I really like is this rounding bottom here. When you see these rounding bottoms, a lot of the times they want to change direction on you. So that's how I'm seeing it.
No, and it looks like the sell-off occurred just as those Europe negative COVID headlines. So the price action makes sense to me. Let's see if your joke makes sense to me.
All right. Well, I wouldn't be old money Holmes if I didn't bring a bar joke, right? So a guy walks into a bar with a slab of asphalt under his arm and says, "A beer, please, and one for the road."
Okay, I did not like that as much as the previous.
But
I had to have a bar joke.
Your first two jokes were funny. So
my.
funny, I'm going to make them my own. All right. Listen, Dean, your picks look like my watch list that I trade every day. I already have naked puts on AMC and GMC. I will be taking AG, and I'm going to find a way to play that support level on Cron. I love playing marijuana stocks when they give me a support level. So thank you for that. You're going to make me money. Frankie, I love ball. That reversal is beautiful. Blame Canada. That ETR thing, I can't not play it. I got to find room in my defensive portfolio if it breaks 100. I am really low on dividend stocks, and I need something there. And I love that trigger. That seems to be a nice place. Greg, I got to give you the win tonight. Love the cyclical reopening theme. Love the areas, few different ways to play it. Plus, let's be honest, I loved your jokes. So that's probably really why.
See, he suckered us. He said he wasn't prepared and it was going to be an easy win. And then he came hard. He came a swinging.
No, and listen, if you want to see more of Greg Holmes tonight, in 18 minutes, we're hosting a Traders Lounge for Pro members. And our Traders Lounge, we hold them every morning at 11 a.m. And it's a place you can come and ask any questions. You want to look at a chart, you have a question on education. If you're trying to figure out how to trade, something about options, how to place an order, whatever questions you have, either beginning, intermediate, advanced, we designed the Traders Lounge as a place where you can come and get those questions answered. It's one of the most dynamic features of our pro community. And if you're not a pro member, give us a shot. We got a great group of coaches, experienced. Dean, thank you so much for coming out tonight.
Before we go, Mark, we were gonna have 5 picks here, so I got 5 jokes. I gotta tell this one before we go.
You got a bonus round joke?
I got a bonus round joke here. I got fired from my job because I kept asking my customers whether they would prefer smoking or non-smoking. Apparently, the correct terms are cremation or burial. I had to go dark for you, buddy.
That is the best right there. Okay, I'm sorry. That's the best.
I can't beat that. Everyone have a good night. Thank you so much.
Take care, everybody.